All right, welcome everybody. Today is Sunday, February 23rd. Just wanted to do a quick recap video of the market sell-off we had on Friday and break down sort of how SPX acted. So, the idea being when it happens again next time, what you should look for, how you can play a possible breakdown, or even if you don't participate in the downside, avoid getting into too many upside trades before waiting for a confirmation bounce. So, a few things I sort of wanted to highlight, starting from a big picture overview, right, leading into this sell off. So, I put down some, three sort of bullet points here for you guys as a sort of guide, for next time. But the first important point is, from failed moves come fast moves. What do I mean by that, right? So if you zoom out on SPX, right, so this is the S&P index, and as we've been sort of saying for the last, 3 to 4 weeks, that the market really hasn't gone anywhere. It's been pretty hard and choppy to trade, right? If you look at, this is sort of where 2025 started. Started off at a very weak first week, and then it was a pretty strong bounce after that CPI print here. This was that candle on January 15th. And that sort of led the market from 5700s all the way to 6100 within pretty much a week, pretty much like 7-8 trading sessions, right? So this was sort of the only easier part of this year, in my opinion, right? And that too, after the CPI, right? So really you had maybe 4 days here that were sort of straightforward, because after that came DeepSeek news, big gap down, and then just kept going up the whole week. The week after that was the tariff gap down on Monday, and then it kept going up every single day of the week. Very, very, difficult price action, right? Because there's no direction, right? There's random gap downs that get bought up, no follow through on either side, and then on the upside, we've been talking about this 6100 level. Initially tested it in beginning of December, spent a few days here trying to get through, just couldn't, and then led to this really big sell-off day on December 18th, where the S&P sold off 3%. Came back again in January, end of January after CPI, just could not get through. Every time it got there, we had that Monday gap down, and then finally on Thursday of last week, right? The market broke through and closed through 6100, which was, a bullish sign. And up till here, it was looking pretty good, right? Coming into this week, very easy and straightforward setup here was just a breakout over, this previous all-time high set on 24th of January, which was around 6127. And on Monday, we had a really tight range day. Nothing much happened. There was a little bit of a dip, back tested 6100 and held. Pretty bullish sign. It's a big level. And then on Tuesday, we got a nice move almost to 6150, but not quite. And, up till here, if you were to just imagine for a second that the last two candles were not there, right? 9 out of 10 times, you'd be the market would go up, right? And it was a pretty nice, strong setup to the upside. But on Thursday is the first day, right? Our market showed a little bit of weakness, and I'll break it down intraday in a second. But it gapped down, and the whole morning, like the first hour, was just super weak, and we were doing commentary, and we're telling you guys the market just kept drifting lower, right? And it sort of sold off from 61.35 open all the way to 60.85, almost a 50-point sell off, and then got bought back up in the afternoon. So it closed over 6100, which again, it rescued that level. To me, that's definitely not bearish, almost bullish. But as I always say, you'll know when I mention this a lot of times in commentary, like pay attention to what the market does on a Friday or overall how it closes on the week, right? Because weekly candles, candle closes are very important. They set the tone for the general trend, right? And so, Fridays end up being very important. This particular Friday was option expiration Friday, or what we call monthly option expiration, or MOPEX, right? Typically, these MOPEXs can sometimes lead to pretty, strong moves either way. And so it's important to note that. And also, for those of you who don't know, before MOPEX, and this varies by month, but usually before MOPEX and sometimes after, but on a Wednesday you have the VIX expiration, right? So this time it was this past Wednesday, and it's typically after the VIX expiration, the Wednesday, that you sometimes will note some weakness in the market. We can go into that in depth some other time, but essentially what that creates is structurally a window of weakness after that, leading into MOPEX and also the week after, so next week. But not going too deep into that aspect, I do want to go intraday to show you guys sort of what you should be looking for when you have these kinds of sell-off, so you can look to play the downside next time, or catch yourself while trying to buy the dip too soon. Things that are very important, because these are the days that people, if you're not responsible, and if you get too caught up in sort of in the moment and trying to really buy the dip because you feel that the market's irrationally going down, this is a nothing burger, you can really do some serious damage to your account, right? And many people have been there. It's easy to get caught up in the moment, right? So before I go into intraday, the two other points, so I kind of covered number 3 right here, which was, pay attention to the nuances, one of which I just mentioned. The big level was 6100. Like it's been sort of acting like it wants to, it just never accepts 6100 easily, right? Even after closing through, it just loses it the next day and just can't hold for multiple days. And then there was MOPEX, and then economic events, right? So Friday, you'll remember that 9:45 we had, I think it was the manufacturing PMI, and then at 10 a.m. we had some more economic data. I think it was the consumer sentiment and existing home sales, right? And it was right after 10 a.m. that the market lost, right around then, that the market lost 6,100. And, it sort of never, it had a quick reject at 6,100 from the downside, and then just never looked back, right? Just sold all day. So now, so that's point number 1. From failed moves comes fast moves, right? So this was the failed move. It was a failed breakout. It broke out, but it failed. When that happens, usually you have so many people off sides, including, it was very natural for, any of us to be off sides, because as I was telling you guys, like, after this candle, you should be bullish, like absolutely. Like there's no reason to think that, oh, the market's too high, I'm going to short. No, like the market's telling you it's going to go up, right? But it's on some occasions you definitely have these failed moves, right? It's a poke above and fail, right? But then because so many people are off sides, right, you have a lot of people who have stops here. Like they're like, okay, I'm gonna long this market, and then I'm gonna have a stop at 6,100, right? So when that happens, right, it just leads to a cascade of selling when those stops get hit, right? Because everybody's off sides. So that's point number 1 and 3. So point number 2 is something I mentioned on Thursday. If you go back to commentary, I mentioned that, if you looked at the leaders on Thursday, by the leaders, I mean all of these stocks that have led the market in sort of Q1, right? And I have a sort of a list, like a watch list that I add names to as soon as sort of stocks either gap up on earnings and hold. They have good news. The fundamentals look good, etc. And these would be names like Hood, Twilio, Team, all of the names that have recently made big moves. So if you go back to commentary, you'll see that on Thursday I mentioned in that watch list that had like 20 names, all of them were red, like all of them. What you want to see for these leaders is they show relative strength, not relative weakness, right? You want to see that those names be flat or red when you have a candle like this. So Thursday wasn't a huge down day, but you had names that were down 4%, 5%. Like you look at Hood, right? If you look at Hood on Thursday, this was Thursday, right? It was down 5%, right? If you look at Team, Team was down, about 2%. And then, recently UPST had great earnings. It didn't act well either, right? It was down 5%. TEM, we played, right, recently. That was down 10%, right, on Thursday. So you have all of these names that led the market higher, clearly acting really weak, right? So that's a very good clue for next time, guys. Like when the best names start to act weak, there are issues and usually a sign of upcoming weakness in the general markets, right? So those are sort of the 3 points. Now I will go sort of intraday and break down SPX. So this is a 5-minute chart, right? And this is where the day began, 9:30 on Friday. So straight away, right? It was just like a slow sort of bleed to the 9:45 a.m. data. We kind of were at 6106, right near 6100. That 9:45 data didn't do much, but we also didn't bounce. Now at 10 a.m. At 10 a.m. what happened was we were right here at 6097, and as the news hit, the market gapped down, right, on the news to 6090, so about a 7-handle gap down. That's why this candle is white, because it gapped lower and then kind of tried to recover 6100, right? So by this time it had failed 6100 intraday, and what it did here was back test it from the downside, right? It wicked back, it rejected 6100, couldn't reclaim. If you go back to commentary, mentioned that exactly, like it was trying to it was very important for the bulls to reclaim the 6100. They couldn't do that, right? And I had drawn this sort of very basic trend line, right? That went back to Thursday's sort of lows, intraday lows. And I just had that really for myself, right? To see how the intraday price action develops, right? Because there was a nice confluence of this 6100 level and this trend line, right? So when it failed to reclaim 6100 and rejected the level and this sort of trend line, it was worth a shot, right? To look at puts, or at least, personally for me, the message was, well, I don't want to play calls right now. I'm going to wait to see if the market can reclaim 6100. My bias is going to be bullish over that. Under that, I'm just going to watch or not participate on the upside, right? That's totally fine. It's perfectly fine to wait and watch, as we always tell you guys. But if you were to play puts here, right, this was obviously the first sort of entry you could have had, right? The first obvious point at which you would take profits or look to target is this previous day low, right at 6084 area. So it got there pretty quickly, right? It rejected and pretty much straight flushed out those lows. If you went back to sort of previous day's actions, there was a nice level around 6070 area. It pretty much went right about there before putting in a about a almost a 20-point bounce, or 18-point bounce, and again it just could not hold, right? It rolled over. So I had mentioned, like, around, I would say, here somewhere, that, if it can't hold this this area like 60, the previous stay low 60.85, it has a shot to test 60, 65 to 60.70, and then 60.50. 60.50 was a level we talked about a lot a couple weeks ago, because the market was, just flip-flopping, right? Bouncing off several times, coming back down, bouncing off, etc. So that was another level that was kind of important, right? Because under 60.50 was a straight shot to 60.20. So it's more clear perhaps on the daily chart if I go back. So you have, right? So you have 6100 here. You have these, upper wicks, right? Right around here. So you have 60, 70 here, and then down here you have this level, which is 60.21, where the market had bounced before. Here, and then here you had the 60.50, right? So under 60.50, to me at least, the next clear level was 60.20, and then the psychological level, which is 6,000, right? So going back to the 5-minute chart, once it failed 60.50 is when a lot of individual names were just, done, right? They were cracking. We played Lily on the upside, right? You guys know, in the morning, that acted extremely well despite the market weakness. But once 60.50 broke, right, everything started selling, right? Lily had a pretty big reversal, 20 points almost. But, but along the way, right, there was really no sign to go long, right? Maybe if you thought, 60.70 would hold, that was worth a shot, but it failed again, so you should be stopping out at that point. But if you look at these sell candles, right, like it's essentially all sell candles, and if you look at the ones that are buy candles, they're small, they're wicky. Another wiki, like really small body but large wick. So you have consistent selling pressure, right? You do not want to buy this, when it's acting like this. A lot of people make that mistake. Even look at look at near the close, the last 2 hours, right? From 2:30 to 4 o'clock. It's a very tight range, right? But it couldn't really bounce, right? Every time it tried to go, there's like a wick. So, those are the signs you guys want to look for. Like, that's when you do not, try to buy the market, right? So along with that, I want to give you guys, I want to sort of pair this analysis with a trade we took on the downside, right? MSTR. So if we look at MSTR, on the daily chart first, this stock, after breaking that 200 level, that this was an amazing trade, and some of you guys caught that with us last year. But this 200 trade was amazing on the upside, and it led to a move all the way to like 500 plus. And since sort of late November, after that exhaustion day, MSTR has pretty much done nothing. Like it has just gone sideways, chopped around, and now in the last sort of week, it has really tightened up, right? Coming into this week, we were actually fairly bullish MSTR, and the reason was that the price action really tightened up. It was sort of holding 300. It had back tested 300, reclaimed, and then held at 315 level for almost a month, right? And then you had Bitcoin here, that Bitcoin had sort of, if you forget these three candles, because Bitcoin trades on the weekend, Bitcoin was showing some strength, right? Coming into, look at, this is a Thursday candle, right? It failed to sort of go lower than this 93 area, and it looked like it wanted to test 100,000 again. So, pairing that with MSTR being tight coming into the week, we were bullish and really looking for that resistance near 340 to give way for an upside trade. But on Tuesday or Monday, Tuesday, it failed right at the open, and sort of never got back there, right? So you'll note that we had MSTR for an upside trade on the watch list, but we ended up playing it on the downside. And the reason was, as now if you go back, so this 315, right, is a very important level, right? It held here, like it bounced off here, like another low here. So under that was a pretty clear shot at 308 and then 300. So if you go to now the 5-minute chart, you'll notice that here, the colors are essentially after hours. So, blue is after market close and orange is before market open. So if you look at how MSTR traded right at the open, it sort of found resistance right near 330, 321, 329. And this was also sort of an area of resistance if you go back to Thursday, the day before. So it just could not hold that area once again. So that was like the first clue that, okay, MSTR, along with the market in general, was weak. And then, after sort of, the market after 10 a.m. when it was weak, MSTR slowly was coming into this, broke the 320 and was, essentially created this intraday bear flag pattern. That's when we started looking at it, right? I think we played it somewhere around here. And, the thought process is like, around here, like, it's 12 o'clock here. So if you go back to SPX, let's see where SPX was at 12 o'clock right here, right? So SPX had sold off. That was the first leg, right? It bounced off, and then, it was around here where it was starting that second leg towards 60.50 and beyond. That's where we played MSTR. And, we knew that that 315 was important, right? So 315, even by the time it tested 315, those puts were the 270 puts from this coming week, they were already, I think, 40%, 50% or something. So the first test is 315. You had some buyers, and that's natural for any important level, but it quickly failed, right? And once it failed, it was a pretty fast move to like a 5 to 7 point move right to that 308 that I mentioned. And again, it started sort of bear flagging, right? And as it was doing that, if you looked at the market, like between 1 and 2 p.m., SPX was, pretty much still selling off continuously, right? So we stayed in the trade, and then sure enough, toward the close, it made pretty much a beeline to 300, right? So that was a pretty nice sort of trade in a way. As I always say, for shorting a name, you want to short the names with relative weakness. And for playing long setups, you want to play the names that are showing relative strength. I mean, Friday, execution-wise, guys, for us, we played Lily on the upside, right? If you look at Lily, the first, like, if you just focus on 9:30 to 11:30, let's say, Lily held the open. It took a little bit of time to clear that 880, 882 area, but this price action, where it rips almost 20 points versus compare that to SPX, right? 9:30 to 11:30, very, very different, right? That's your Lily is an example of a stock that's showing relative strength on the upside, right? And it also had a really nice pattern on the daily coming into Friday, and it had it sort of had some news pre-market. It was gapping up, so there was a reason to play it as well, other than technical reasons. But the point here is hopefully that this Lily. One last point I'll make is like this Lily chart, right? It's kind of trading near its recent highs, right? In the last, I would say, 4 months or so, versus something like MSTR. When we played it on the daily chart, it was trading near kind of the lows, right, in the last 4 months. Not quite, but still toward the lows. So, that's again relative strength versus relative weakness. But hopefully, that kind of breakdown, helped you guys. Of course, like one other question you might think about is, okay, where do I take profits if I'm in this kind of a trade and it's working? Since we got in here, you could have taken some off at 315 because it was a key level. That's certainly where I did my first scale out. And then, after it failed 315, I held, to see how it would act at 308. It, bounced at 308 and then, went to 300, right? So it actually acted really well. Like sometimes stocks don't act like you would think, but MSTR acted pretty well on Friday on the breakdown. And, I think if you look at, this intraday patterns of like, okay, it's consolidating, selling off, not really able to bounce too much, that allows you to stay in the trade, right? Yes, if it consolidated and then shot up here, like it kind of invalidated that intraday bear flag pattern, yeah, sure. You could exit the trade, or you wait for 315 to get reclaimed and conclude, okay, they were still buyers here, right? That saved the day, but that didn't happen, right? So personally, for me and for us, we held some runners, right, to see if we can get some continuation into next week. But that's it for this trade recap, guys. Hopefully you find that useful. I'll catch you guys on the next sort of trade recap. Hope you guys have a good rest of your weekend.